Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are back with another episode of the Real Estate Investing Club. Today we have with us Chris Mills. Chris has over 15 years of real estate experience as an investor and has experience as a loan originator, it's a hard one to say, property manager, and an agent. As a financial advisor, Chris specializes in working with individuals and organizations who have or desire real estate holdings and helping them map out and achieve their financial goals. His real estate experience helps him address the complexities and opportunities unique to real estate investors, and his specialties include alternative investments, 1031 exchanges, and liquidity solutions. So there is a lot to talk about here. Chris, thank you for hopping on the show.
Oh, you're welcome, Gabe. Great to be here.
Absolutely. For those who don't know, I actually was on Chris's show, and I was like, man, this guy is such a good host. I want to have him on mine, so we're glad to have him here. So Chris, we always start with stories here at the Real Estate Investing Club. Why don't you take us back to the beginning of your story? How'd you get started in real estate?
Sure. I've been interested in investing for a long time, since I was a teenager. And I started looking into things probably, around the time I turned 18. I started buying stocks and was getting mentored by a couple guys. And I very quickly got turned off. My 18-year-old brain wanted to kind of take charge and make a bunch of money. And so someone kind of instructed me on how stocks go. And so I bought some stock and saw him the next weekend. So I was like, all right, how do we make it go up? How do we make money with it? And he said, well, you don't have that kind of control.
Now,
yeah. So I was like, well, this is dumb. I'm not doing this. So I started looking into other things. I had started a business a couple of years after that, something small, but wasn't knocking it out of the park. But it was my first time actually. I got a check in the mail, and I remember it was less than $10. It's probably like $7, $9. But I made that money. Like I made it full cycle from scratch, and that was just an amazing feeling. So that kind of sparked the entrepreneurial fire. Then one thing led to another, liquidating some of that stuff, put some money in my pocket. So I said, okay, well, what am I going to do with it? And in looking into, where to store money that you've made as opposed to making money, as generating wealth as it relates to time and all that kind of stuff and passive income, that led me to real estate. So started investing about 2004 and helping other folks invest. So I was wholesaling and doing that route. Started buying my own stuff, single family, mixed use here in DC, stuff like that. That led to my property management company. So once I had, a handful of properties under my belt, it made sense to move from, totally spreadsheets to finding some software, putting a company around it, having that presence as a management company, which also helped kind of the arm's length relations between, my tenants and I. They were dealing with a management company instead of directly with the owner. That helped things for in most situations. Once I had the company, the entrepreneurial bug kind of kicked in again. Like, well, I can make money with this too. So started taking on other clients and helping other people with their local portfolios. They enjoyed the way I was doing things and said, "Hey, can you manage my stuff out of town and these other states?" And so I was thinking about it because I didn't want to try to get licensed in all these states and that kind of thing. So I started doing more of an asset management type role and managing property managers and optimizing portfolios. And that felt really good, but there's not a lot of money in it because just by the nature of the service, you're optimizing their portfolio. You don't charge a lot of money to bring it back down, but it felt really good helping people, and that's always stuck with me. So when the opportunity came to kind of roll all this experience into financial services and work with a longtime friend alongside him, it was really exciting. I jumped at the opportunity. So it feels really good, fast forwarding all this time. And now I'm back in financial services and dealing with the markets and all that stuff that I started out anti. But yeah, there's being able to paint the big picture for people and help them see all the angles. And because even myself, as a real estate investor, I was really tunnel focused, and real estate was the only thing that existed in my mind. But having a plan, knowing all your options, things just work out a whole lot better in the long term when you kind of educate yourself and have people you can tap that are specialists in various areas. So that's I guess the quick version of my life story as far as real estate investing goes. But yeah.
No, and I love it because it's so non-linear. It's very, you were doing one thing, you found this other, mini niche within that thing, and then you hopped over to the other thing, and it just kept kind of growing organically. That's really cool. And so, I mean, you touched on a whole bunch of different things in there. You said property management, asset management, you bought your own rentals, you were investing in properties, and you even started out in the stock market. Like, which one of those, up to the point where you are today, the financial manager, sorry, I'm a financial
the advisor. Yeah.
That's the word that I was trying to come up with. Up to the point where you became a financial manager, which one of those businesses roles that you took on was your favorite? Which one did you kind of feel fit your personality the best?
So it's probably maybe either the wholesaling or the asset management, because connecting people and being the guy in the background is a lot of what I was comfortable with. It's very against my personality and my natural bents to, self-promote and be the smartest guy in the room. And even if I am, I kind of low-key like the fact if no one really knows it, I had a handful of people that I was, making a whole lot of money for. I was the guy. Well, it started because I didn't have the cash initially to put into but so many deals, right? I was investing and then very quickly ran out of cash. So I was finding deals, and I didn't like doing fix and flips myself. So just because, again, I knew my strengths and I knew what I had a tolerance for, and they were putting a whole lot on the line doing these flips and making, big returns. But I was the guy I'd say, hey, here's the property. I've talked to the owner. We've got these terms lined up. Here are these contractors. These are their bids. This is what it'll cost you. This is what you should net on the other side based on what I'm seeing in the market. Here's X, Y, Z. So it's a whole package that I would then deliver. And, I was bringing money to people. Like, I was making money for them. And of course, as a wholesaler, I get my piece. And So I was making out too. And yeah, everyone's happy. The world goes round. I'm making people a lot of money. I was that guy, again, in the background. No one ever sees me when they see this property, this fantastic property hit the market and all this kind of stuff. And I can look at that still and say, you know what, I made that happen, and that felt really good. It felt good, you know, bringing up neighborhoods, there in DC. Felt really good, helping these guys feed their families and make a lot of money. Yeah, just being that guy in the background, making the wheels turn and the gears go, felt really good.
Cool. No, I 100% agree. And it's, I do wholesaling as well. And it's nice, even though I did not do the flip, if I wholesale the property and then I see it hit the market and it's like pristine, I feel like I contributed to that just a little bit,
Mm-hmm.
maybe 5%
Mm-hmm.
of that was my
Yeah.
so how'd you actually, when you were wholesaling, we're going to get on to 1031s in a second, but when you were wholesaling, how did you actually, how'd you get these properties? What was your main lead generation tactic?
So I sent letters and put up signs.
Nice.
Um,
Wow.
I don't know. Yeah, I don't know if one was really better than the other. Um, some of the biggest deals and most opportunistic came from just the signs.
Really? Wow.
One was just one I forgot about, because it was off my normal beaten path, and this lady called me one day. So yeah, those, I kind of consulted some of the gurus and stuff that, I definitely know better now, but it wasn't all for nothing. And some of the people that I was introduced to and talked to, and a mentor that I paid one time, I did learn a lot of stuff and, get my money back out of it. But yeah, it wasn't anything unique or sexy. It was just, tracking down the owners and trying to get a hold of them, usually by letter, something respectful. No like
The
yellow postcards or any, yeah.
Yeah.
But just like a formal letter, relatively, or yeah, sign.
Yeah, that's crazy. I've when I first started out, I tried Bandit Signs, and I got like 0 calls. I put out probably 50 Bandit Signs, and I was the guy because I kind of feel that Bandit Signs, they pollute the environment a little bit, and so I would put them out on Friday and then pick them up on Sunday,
I
and
did the same. Yeah.
yeah, and it was like a lot of work. And I would put out 50 freaking signs and I would get 0 calls. And I was like, screw this. I'm done with it. I'm no longer doing Bandit Signs. All right, so that's cool. So you've you did a lot of wholesaling, a lot of property management. 1031s is, well, financial planning is where you're at right now, but you mentioned 1031s, and that is a big topic on a lot of investors' minds, especially on the coastal cities where we've seen so much appreciation, and we're looking to use that equity that we've gained, in other projects. So let's get into 1031s. I know you kind of focus on the Delaware Statutory Trust. So what is, for people who are not familiar, what is a 1031? Who does it benefit, and what is the best way to go about it?
Sure, absolutely. The IRS has the 1031 exchange is based on what the IRS said as far as being able to exchange one property for another and defer the taxes. So the capital gains taxes, the depreciation recapture tax, there's a lot of stuff that can add up really quick when you're selling a property that you've had for a while, especially. So it allows you to defer the taxes from one sale and, kind of tack it onto the back end. And you can essentially just swap till you drop, as we say, and keep deferring those taxes, which is a really, really great gift from good old Uncle Sam. In 2004, the IRS decided to introduce the Delaware Statutory Trust, which really doesn't have much to do with Delaware. It's just part of, how it came out. So it's not, doesn't have to be a Delaware anything. But in 2004, they came out with a ruling that said that there's a security, the Delaware Statutory Trust can stand in exchange in replacement property, in the place of a replacement property. So you can exchange out of a physical building into the Delaware Statutory Trust. And if, for simplicity's sake, you can kind of think of the functionality of it like a syndication that we're familiar with. So same kind of timeline, very similar structure. You've got the trustee and then the beneficial interests. So the trustees at the helm in control, just like a GP would be. And then you have beneficial interest that you buy into as you 1031 out of your property into a DST. Then afterwards, it runs its course 5-7 years like a syndication would. Then at the tail end, you can 1031 into another DST or back into physical property if you want. So it's a really great tool, especially for active investors who are looking to slow down, retire, take a break, what have you. It's a really great way to go passive and streamline things. It's for accredited investors only. That's a key aspect. But like a lot of these alternatives, it's for accredited investors only. But that's the gist of it. There's a lot of benefits as well. Again, just the passivity of it, avoiding the active management stress. It's institutional quality investments. So you have institutional quality properties, usually very, A-class stuff. You're not going to get big value add lifts or anything like that. None of the more risky stuff, just by the nature of the rules that DSTs have to follow. Let's see. I think I've covered the basics. Do you want me to kind of drill down a little more, or?
Well, yeah, I'm gonna ask a few questions here because I've done 1031s, but I've never done a DST, and I've heard that word thrown around, but I'm not quite sure I understand. So for instance, I'm selling a property right now here in Seattle, and I'm making about 200,000 from it on the sale. So if I were to do a 1031, I would have to go and I would have to buy a property with that money, with the 200,000. And then I wouldn't have to pay taxes on the amount that I put into there. And I would have to basically be the only one on the sale. And then a number of years later, I'd have to recapture that. How's that different from a DST? Does that mean that I don't have to actually buy the property with a DST? Like I still get the recapture benefit or the delayed taxes benefit without having to actually go out and buy the property?
Correct.
So what do you actually do with the money?
So just like in a regular 1031, when you sell the property, you don't actually touch the money. The money goes to a qualified intermediary. Then you have the 45 days. I guess I'll cover that timeline for people who don't know. There's day one when you sell the property. That's like, day zero, I guess. Then you have 45 days in which to identify 1 to 3 potential replacement properties. Then fast forward to day 180 from day zero, you have 180 days from the first settlement to go to settlement on your replacement property. So within that 45 days, you can identify, hypothetically, like a real property, like you find something that'll probably work and you start doing your due diligence and all that kind of stuff. You can have those other 2 slots be DSTs. So if your stuff falls through on day 46, you've got a couple backups. You can go to a DST, or you can go, if everything works out, you can go to your physical property. So it does not, you have those options in a 1031 exchange. Lost my train of thought real quick. Oh, so boot is another aspect of a 1031 exchange. So any money that's left over, we call boot. So if you have like a $1 million transfer, but you only spend 800,000 of that on the back end, that extra 200,000 is called boot. So you'll be taxed capital gains on just that piece. So what a lot of folks actually do is, even if they're going into a physical property via 1031 exchange and they've got that extra, say hypothetically 200,000 left over, that 200,000 can go into a DST instead of getting taxed on it.
Okay. And once it's in the DST, I mean, that DST is not purchasing a property. So do you put that, does it go into stocks, or is it just kind of like sitting there? Does it not grow at all?
There's underlying properties. So a DST can hold, a single multifamily, for example, a single, huge distribution warehouse, or it could be, a portfolio of, properties all over the country. It could be hotels, it could be retail, just all the asset classes and things that we normally look at,
So
instead of being held.
It's like using the proceeds of it from a sale for a syndication that is tax deferred, essentially.
Correct. That's why I was saying it functions the same way. It's a really good way to think of it, because we're already familiar with syndications. So there's only a handful of differences. The limitations, for example, they open an offering and then close it, and there can be no more offerings once it's closed. There's rules that they have to follow for holding cash in between distributions. That has to be, if they sell a property, they can't just turn around and reinvest the proceeds. They have to, make those distributions. Tenant bankruptcy, risk of tenant default, these are the only reasons you can actually switch up the terms of the deal. If your tenant goes bankrupt, then you can get another tenant, but you can't just do it willy-nilly, go out and get new loans or new leases, things of that nature. So it's a pretty strict and rigid rules that they have to follow, which is why I say you're not going to get a lot of, the returns kind of reflect that. You're not going to get the huge value add, gut job type returns off of DST, because again, it has to be, pretty clean and polished type deal. So you get some appreciation,
less stress. And that's
right. Exactly. That's the trade-off.
Right there is less stress.
That's the trade-off for most investing. Yeah.
Absolutely. Well, shoot. Hey, I'm glad we went into that topic. We did speed through our 20 minutes, so I got to push us into the quick question round. But sure. I appreciated that conversation.
Yeah.
So to start out the quick question round, this is where I ask quick questions. You give me quick answers. We always start with books because I'm a big bookie. So why don't you give us your two favorite books, one for real estate and one for just general life wisdom?
Oh, man. The book that got me started was Rich Dad Poor Dad. So I'll probably point to that just off the top of my head. You might have heard that 100 times asking these questions.
It's all good.
But yeah, that was one of the turning points for me. And non-real estate. I love endurance. It's a great story about Ernest Shackleton and his journeys and all that kind of stuff. It's an amazing. It really gives you a charge, especially as a investor and businessman. So, yeah.
Actually, I read that book. His story is crazy. For anybody listening, you should definitely check it out. Endurance. It's about a guy who crashed in the Antarctic, and he had to go basically across the Antarctic with his entire crew. It's a crazy story. Moving on, this is for your younger self. So if you were to go back to yourself, say the Chris who is, just reading Rich Dad Poor Dad, just getting into real estate, go up to him, look him in the eye, give him one piece of advice moving forward.
Man, trust your gut and follow your own rules. Just stick to it. The only things that I could, learning opportunities, regrets, however you want to categorize them, was me getting talked into something where I knew better, whether it be a deal or whatever. So yeah, that would be it.
Great piece of advice. Trust yourself. I love it. Next one. I mean, it sounds like you are outside of active investing right now, but if you could choose a place in the United States that you feel, you're kind of excited about as a zone to invest in, what would that place be?
Yeah, I'm actively now, so I do still invest a bit. I bought in Texas years back, and I if I were to do something tomorrow, it would probably still be the Dallas area. I'm also looking in various areas of Tennessee. They've got my interest right now as well. Right outside some of those major cities, the stuff looks pretty sweet. So
Absolutely. I
yeah.
like that area as well. And this is an opportunity for you to flex, to kind of show off your strength. If you have a super strength or a superhero strength, what would that strength be? What are you absolutely amazing at?
Oof. Probably the deals. I guess I'll probably just say that because I enjoy them. I really enjoy putting together numbers, putting together plans, making numbers work, making everything win-win. Yeah, whatever label you want to put on that is just putting numbers together, putting plans together. Yeah.
You're the mastermind. I love it. And
There
then the
you go.
final
Call
question.
myself a mastermind.
The final question is for the listeners. You've given us a lot of good advice, so I'm sure people want to reach out to you. What is the best way for people to get in contact with you?
So let's see. Yeah, my podcast you mentioned earlier is Skyline Views. They'll probably hear a bunch of stories and learn about me there. The Haney Company is my company website. Mr. CD Mills, that's MRCDMILLS.com, is my website. My handle's the same. I've got a book, Legacy 101, A Practical Guide. It's on Amazon. So I guess you can check out some of my stuff there. There's a bunch of me out there to be found. So yeah.
Perfect. And I will put that URL in the show notes. So if anybody listening or watching wants to get in contact with Chris, just click that little more in the description. It'll pop down the full description. In there, you'll be able to find one or all of those URLs that Chris just mentioned. So reach out, say hi. Again, Chris, thanks for hopping on here. It was a pleasure talking to you today.
Appreciate you, Gabe. Thank you.
For everybody who's listening and watching, thank you guys for showing up. You are the reason that we do this, so we appreciate having you here. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, hope you guys have an absolutely kick-ass week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesaler's Template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.